Support and resistance. In this video, we're going to be talking about fixed range volume profile and how we can use it to our advantage to identify support and resistance, right? And before we proceed, I would like you guys to take a pause the video and read the disclaimer. This video is intended solely for educational and entertainment purpose only, right? Any actions taken by the viewers, their own responsibility, including our trade and decision and outcome. So let's dive into it. Identifying support and resistance using fixed range volume profile. Here we go. Fixed range, right? This is how it looks like. It's a profile that will show you which price level has the most volume and where volume has been transacted. This is key. Fixed range volume profile has three levels that are very crucial to us that we have to always pay attention to. Number one is the point of control. The point of control is the point in which the most volume has occurred within that profile. Let's say the price is going up, right? And the price is like this. And you're trying to measure the volume that occurred within the range, because that's what the fixed range volume profile does. It's going to calculate all of the transaction that happens within a specific range or within an anchored range. Where you're starting from. Let's say you're starting from this point and you're trying to calculate the volume of this range, or you're trying to calculate the volume of a uptrend from a low to the high. You want to know the volume of which transacted area, right? When you plot it, you're going to get a couple of levels. One is the point of control, which is the most transacted area within the range. Is a point of control, POC. The value areas, which is the value area high, this, and the value area low, this. All right. This is being calculated by the percentage of the particular settings you choose, right? Chosen by the user. For me, I use 68% to calculate where the 68% of the value is transacted or 70% of the value is transacted, right? So you get a value area high and a value area low, right? These levels tend to act as support and resistance. And other levels you can get is the high volume node, where there is transaction, like a significant transaction, but not as much as the point of control. You understand? So now, the high volume node, I've just explained it. It's on this slide. The high volume node is where there is significant high volume to a transaction that occurred, but not the point of control. Remember, the point of control is the most transacted level in that range. High volume node, this place have high volume, but not has the highest like the point of control is, right? The point of control is the highest volume in the profile, but other high point can be useful. The POC is the highest point of volume in the profile, but other high points can be useful reference too, right? These levels tend to act as support and resistance. They are very useful. You have to use them with confidence with other horizontal levels. If horizontal level is on low volume node, this will not going to hold, like here. As you can see, here is a high volume node. This is low volume node. So a high volume node, the point of control, the value area high and the value area low are the key level we want to be using. So since you understand the components of a fixed range right now, let's dive in how we can use it as support and resistance. Fixed range volume profile. How do you pull the fixed range volume profile? You can pull it just like you pull Fibonacci, and you can pull it in a different way from the beginning of your range, start of your range. You can pull it in the beginning from the beginning of impulse. You can pull it from pivot highs or lows. Or you can pull it from beginning of a time-based session, like previous day, previous week, previous month, or London, beginning of London session or New York session. Do you understand? So these are the ways you can pull fixed range. Example of how you can pull fixed range in a range, beginning of your range. You can see this is an impulsive move, right? The range starts from here to here, right? So if you want to pull it, you can pull it from the beginning right here to this point. Or you can just click from here to here, beginning of the range, right? The first mouse click, the second mouse click, right? You can see, this is another example how you can pull fixed range to measure the volume in a specific range. You can see this is an impulse. You're not measuring the impulse, you're trying to measure the range. This is the beginning of the range to this point. So you pull it from the beginning of the range to the current price. You get key levels like value area high, POC, and value area low. So the POC is the most transacted volume. You can see it's acting as support, right here, resistant, here, support, right? For the POC, and you can see the value area low, acting as support, and right here to support. Same goes to the value area high, resistance, and like that. With this, you get the defined levels for support and resistance. Value area high as support and resistance, POC as support and resistance, and value area low as support and resistance. In this slide, I'm trying to show you guys how you can pull a fixed range to determine support or resistance in an impulsive move. You can see the impulse start from here down to this point right here. You can measure the value area high and value area low of this impulse, knowing where the most volume is transacted at and where you can find potential SR level. The POC is sitting right here, the value area is sitting right here, and the value area low is sitting right here. And those levels can act as support and resistance. Another example, this is a strong uptrend. You can see higher lows, higher highs, higher low, higher highs, higher low, higher high. You can start from the beginning, which is the beginning of the impulse right here, to the ending of the impulse, which is right here. The ending of the impulse, which is right here. With that, we can get a specific price levels that can act as support or resistance. You can see this is the value area low, this is the POC, this is the value area high. All right. In this case, in an impulsive move like this, for bullish impulsive move uptrend, you want the value area low to act as support. You don't want to lose the value area low, because when you do, you're going to, sell off to the downside. It's called a P-shaped type of profile. And the POC is going to be resistance, and the value area is going to be resistant. But the last support you want to see will be the value area low. As you can see, there is support on the value area low. And I hope you understand how to draw fixed range, how to pull fixed range from a pivotal high or low. Look for a swing high or swing low, where price, reverse from like a strong reversal, like, a pivot in charts. And you can pull the fixed range from the beginning of the pivot to the current price, right? To find key levels, SR levels, value area high, POC, and value area low. As you can see, this chart is I forgot the time for this chart, but it doesn't matter. You can see this is a pivot in chart. And this is a pivot. It's a swing low, and price has not traded to this point for a long while. So you can take your take your fixed range from the beginning of the pivot at that time, maybe to this current price. I just want to show you what happened in this section. And price, found support at the value area low, continue up. Sometimes value area low can be resistant and value area high can be support. It depends on where price is. In this example, you can see the beginning of a pivot high. This is Bitcoin charts. The 2021 to 2022 bear market high. When you draw the fixed range from the beginning of the high to the where we first found support before price started ranging. You can see that the POC acted as resistance all through 2023, and it was a key resistance. And if you use that as a confluence, you can see that it's resistance right here, there's support right here, and support resistance flip and all of that. So how to pull fixed range? Pull fixed range through using time-based sessions and all of that. How to pull a fixed range through from the previous day, previous week, and previous month. It's very easy. You just start from the beginning of the day to the ending of each day to get SR levels. For this example, this is the previous day. You can see each day profile. This is each day profile. This is each day profile, each day profile. These levels are gonna be acting as support and resistance intraday. This is a weekly profile, right? Each of these weekly value, previous week value high, previous week POC, previous week value yellow, start from beginning of each week to the ending of each week. They start from the beginning of this week to the end of the week, beginning of another week to the end of a week. So that's how you can pull it from the beginning of the week to the end of the week. You will get a specific level, the value high of the previous week, value low of the previous week, and POC of the previous week. Same goes to the monthly, from the beginning of each month to from beginning of each month to the end of each month. You get the specific levels, and this level can be support and resistance. As you can see on the previous day, right here, I'm going back to the previous day. If we start here, this is the previous day value high, the previous day POC, the previous day value yellow. I was holding support as the previous day value high up to this point. The previous day POC held, went up, and price dropped, right? So another day begins right here, right? And the previous day value high is here, POC is here, previous day value yellow is there. Price was holding. Price was right here, rejecting the previous day value yellow. You can see right there. And while it was rejecting the previous day value yellow, it moved down. Price breaks the value high and move up. Right? Continue. And what do I say by a strong impulsive move? You can see from here to here is a strong impulsive move. And that there was a P-shaped profile. And the beginning of the day, price was consolidating, went up, came back down. The value area low of the previous day held a support and moved back up, right? Moved back up, then finally drops down. The next day, price was consolidating, move up. You can see the value area high acted as resistance, right, of the previous day. Because it's a new day, the previous day value area high is right here. You can see that. You can see the previous day value high is right there. Held as resistance, push price downward, down to the naked value yellow from the past 1, 2, 3, 4 days. Right there. Same goes to the weekly. You can see how these levels act as support and resistance. You can see support here from the previous week. A new week starts here. Price was just, consolidating, went up, went down. Same goes to the monthly. You can see how the previous monthly was acting as support right here and all that. I'm going to bring in a video I'm going to attach a clip where you guys can mark the previous month, previous week, and previous day. Let's talk about naked point of control. Naked POC, which is naked point of control, are levels of most transacted area of a particular fixed range that has not been tested. It could be previous day naked point of control. It could be previous week naked point of control, previous month naked point of control. These are point of control that has not been tested at all. Price has not reached to that level. As you can see, this is ES chart. Right? Price at the beginning of the day to the ending of the day. And the new day starts here, price was just consolidating. At some point, price went up to test the naked point of control, which is from the previous day, find resistance and drop. These are POC and high volume nodes serve at the best potential SI level, particularly when tested within 1 to 2 days of being left on top. Do not trade naked point of control alone. Always look for confidence, please. Always, always, always. So, as you can see, this is the same chart I explained earlier. Price started a new DOI. It was consolidating, went to the point of control and sold off. It was being defended from people that will be selling from yesterday. Naked point of control, using this grass USDT chart, weekly volume profile for an example, right? The current week, the previous week, and 3 weeks ago, and this is like 4 weeks ago, right? And the POC of that 4 weeks ago has not been traded to. Price drops down into the naked point of control of the previous week and bounce with a reversal candle. Yeah, now we're going to be using fixed range volume profile to determine, fixed range volume profile has different kind of profile. There is P shape, there is D shape, and there is B shape. And these shapes of profile, when I say P shape, right, it's like this, where the profile is going to be like this for P shape. And for D shape, the profile is going to look like this, right? For B shape, the profile is going to look like this. So this type of profile signifies whether price or market is in balance or imbalance, right? A P shape profile occurs when price is in, breaks out of balance and trying to seek for a new balance. And a P-shaped profile is where price breaks from a balance and try to seek for balance. A D-shaped profile is when price is in balance. The value area low, the value area high, and the POC is going to be like this. While the P-shape is going to have the value area high, the value area low, while here the POC is going to be in the middle. The B-shape, the value area high is going to be here, the value area low is going to be here, and the POC is going to be here. I hope you guys can understand what it is, right? Value area high and low are hedges of volume profile. They serve as support and resistance, right? This range of price level where this is the range, the value area high and value area low are hedges of volume profile. The range of price level where 70% of the trading volume occurred. That is where the value area high and the value area low is. Remember, I talked about this in the previous, let me see if you can go back to that slide. The value area high and value area low are where a significant percentage of volume is concentrated, chosen by the user. Sometimes I use 68% or sometimes I use 70%, right? So remember, going back to the balance and imbalance, we know this is where the 70% of volume or 68% of the volume is concentrated. They serve as support and resistance. As if they are serving, if you see a profile, a D-shaped profile like this, where the value area is here, why here, the value area low is why here, and the POC is here. If the value area is acting as resistance, value area low is acting as support, this is a balanced profile, right? When price break above value area high, value area low, that is, price breaks it signals a potential breakout or a trending move, which is imbalance. I'm going to show you a couple of examples, right? You can see the previous day, end of the day, and start of a new day. The start of a previous day, price open inside the previous day profile. The value area was acting as resistance. The value area is acting as support. This is a balanced profile. The upper boundary of the value area is resistant, and the lower boundary of the value area, which is the value area low, is support, right? Like I said, you don't want to be, like I always say, you don't want to be trading this level alone. You just want to use it to identify potential support and resistance and look for other tools that line up with it. How the market moves in relation to volume profile, like I explained before, a D shape is a balanced profile. A D shape, right? it's a balanced profile where it shows there's going to be consolidation. The upper boundary of the value AI and the lower boundary of the value AI. Price is just going to be ping-ponging inside, and it's just going to be consolidating. Balance means consolidation. Price will trade within value AI as the market finds equilibrium. Imbalance means breakout or breakdown. Price move away from the value AI often rapidly, right? And sometimes price return to balance after, like I said, let's say there's a D-shaped profile like this, value high, value low, and there's a D-shape. There's a D-shaped profile. And price breakout. Price gonna seek for balance from the previous profile, from the previous week, previous month, previous range. Yeah, that's basically what price does. Return to balance. After imbalance, the market may return to value area if the move fails to sustain. Alternatively, the market establish new value area or find an old value area at higher or lower level. That's how the market moves. Market move from consolidation, imbalance, which is to balance, imbalance, seek for balance. It's like a market maker sell model, market maker buy model, right? We're going to talk about that in the other class that we're going to be having. Hope you understand. The balance profile is when market move from the value area high to value area low, consolidating. Imbalance is when price breaks above the value area and often move rapidly. Returning to balance is when price fail to, when there's a fake out, a swing failure, and returning to the balance, or when price seek for a new balance. When the market opens within the previous day, previous week, or previous month value, it indicates balance, likely to remain range bound. I explained this earlier. I'm going to show you a couple of examples. Conversely, when market open outside the previous day's week or monthly value, it shows that the market is in balance. When the market moves outside the previous or value area, it shows that the market is in balance and it's likely going to continue. I explained this before. You can see the daily open, right? Consolidation goes to the value area high. Market open inside the previous profile is the market open, the daily open of a new day. Consolidate, value area acts as resistance, value area low act as support. Why? When in the balanced market, it's like a main version. The value area is going to be the resistance. The lower boundary of the value area low is going to be support. And define the current value area. And another example of imbalance, right? Price, the previous volume profile. Market open outside the value area high, right? The previous value high. This indicates imbalance, right? And this move is likely going to continue or seek for a new balance. And, sometimes when it fails, it's going to return into balance. This means that's a fake out. But most of the time, when market opens outside balance, it's showing you that it's going to be a strong directional move. You don't want to fade it. You just want to go with the trend. A couple of examples are here. You can see when market opens inside the value, it's called acceptance. This is balance. This is neutral consolidation. When the market opens inside the previous value, it's just going to be, like I explained, value high is going to be resistance, value area low is going to be support, and it's going to be ping-ponging, right? What about if the market opens inside the previous value and reject, right? Opens and price start going below the value area low, it's going to form an imbalance. Like I explained, breaking the value area low or the value area high, it's imbalance. It's going to be a trending move. That means, in this case, it's going to be bearish. When the market opens inside the previous value and it starts breaking the value area low, it's telling you it's an imbalance and it's a bearish trend. Same goes for the bullish one. When the market opens inside value and breaks out the value area high, back test it and move away, it tells you it's a trending move. Market is in a balance. Right? Another example is when market open near the value and get back inside the value area. This tells you market is in consolidation. If opening near the value acceptance open and I say back into the value, this is still bullish. it opens outside the value and it goes into the balance and consolidate. Right? Open outside the value and find its way back inside and consolidate. This is bearish, right? This one, open near the value, market rejected the value here low, and this is telling you like, okay, this is rejection, and this is going to be a trending move. It's in balance because price did not want to accept back into the balance. It rejected from the value here low, and this is telling you it's a trending move, and price is trying to seek for new balance below price. Same goes there. Price open near value and rejected from the value AI and continuing to move up. It's telling you, okay, this is imbalance. Another example is when price, right, open, outside the value, just like I explained earlier, and move down. I showed open outside the value and just continue. This is imbalance. This type of move is imbalance. Price open outside, value and just continue up. Price going to seek for a new balance and, keep trending and find a new balance. Another example is when price open outside value and find a way back into the value. This is a bullish signal, and it's telling you price is going to consolidate because it's going back into the balance. You open outside the value and it fails to continue trending, so it's a bullish sign. Or price open outside value area high, and I find a way back, I step back into the value area high. This is bearish. Alright, knowing this, study this, practice this, just keep attention to it. You know how price move from balance to imbalance and how it does work, right? So, how the market move in relation to volume profile. A market that opens within the previous day, week, or month value is in balance. I explained this a couple of times. I hope you understand. They're likely to remain rotational between the value year high and value year low until new information comes in. A market that open outside value is in balance and likely to remain in balance in the direction of the break, unless it goes back into the value. This one open outside value and find a way back into the value. This is bullish. Open outside value year high and find a way into the value. This is bearish. And when it opens outside value and strike, it's just telling you that it's going to continue until it does the opposite, right? Yeah. So acts and helps, right, for fixed range volume profile. Always look for confluence. Do not trade this alone. Do not trade fixed range alone. Always try to look for confluence. Use Fibonacci, use other tools, horizontal levels, historic price action, VWAPs, use Delta, CVD, use open interest, use, everything, and try to look for something that points to the same direction of what you're looking at, right? When the market is likely to move, right, price gravitate towards the high volume areas. When a breakout is likely to sustain, increase volume of a breakout point confirms the momentum. Use market structure for stop loss placement. Never use fixed range levels for stop loss placement. You can use fixed range as potential take profit zone. A breaks and reclaim of the POC can indicate potential retracement into value year high or value year low, depending on when it's coming from. Like I said, a break and reclaim of POC level can indicate a potential retracement into this value areas. In a strong trend, right, value year high or value year low should act as support. If lost, you should expect the full rotation. But we have to be aware of the POC. If the POC is lost, then the early sign that is going to or is going to the other extreme, and the other extreme edge will get hit. Use at least 2 different fixed range pools to look for areas of value year high and value year low or POC confluence. Always follow me on all social, on X, formerly known as Twitter, Big Bag Tweets. I'll see you on the next one.